Hi, I'm Parag Sanghani with the Westwood Salient Energy Team. For this month's video, I'll recap September performance and show an interesting graph on AI data center power demand that comes from Schneider Electric. On page 2, we see that September was a flattish month for midstream companies with both the AMNA and the AMEI up about 1%. MLPs fared worse with the AMZ down nearly 4%. Year to date, midstream is up 5 to 8% depending on the index. Broad energy was generally flat during the month of September as well, with the exception of clean energy, which was up about 5 to 7%. For the year, broad energy performance is mostly positive, with oil and gas up between 1 and 7%, and clean energy up more than 30%. Clean energy has recovered nicely following the passage of the OBBB. Oil services companies continue to lag the overall industry and are now down 4% this year. We believe this is due to declining oil field activity levels, which directly impact oil services companies. On the commodity front, crude oil was down 2.6% in September, while U.S. natural gas was actually up 10%. Landed LNG prices were mostly flat for the month. Year to date, commodities are lower, with crude down 13% and U.S. natural gas down 9%. Moving to midstream specifically, U.S. and Canadian companies focused on natural gas and power fared particularly well in September. Solaris was a standout winner, up nearly 30% for the month. MLPs, which tend to be more liquids focused as a sector, faced pressure as oil prices weakened. Plains All American posted the worst performance for the month, declining 5% and essentially erasing its year-to-date gains. For the year, midstream has been seeing significant dispersion, with top-performing C Corps all having sizable natural gas businesses, while the biggest underperformers tended to be oil and natural gas liquids-driven transporters. To put the dispersion in context, Venture Global is this year's worst performer, down 43% from its IPO price, while Solaris was up over 40%. Looking ahead, we believe we are in a long-term growth cycle for energy infrastructure. Natural gas demand is shifting higher in coming years, and the graph on slide 5 from Schneider Electric shows the potential power demand increase from AI data centers over the next decade. Schneider's analysis shows that power consumption could grow as much as 13 times the current usage if there were no constraints to AI model development. 13x power demand growth in 10 years seems unlikely, but growing even half that rate will require significant investment in natural gas infrastructure. I'll leave you with that for now, and thank you very much for your interest. If you have any further questions, please reach out to your Westwood representative.